for lack of a better word, is good. Read it right. Read works.
Hello everyone and welcome to episode 21 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out we went from 78, I think, or 79 trillion up to 84.8. And we spent a lot of time working on a new strategy for buying and selling stock options based on the analysts' ratings for various stocks. And for those of you who are joining us late, that didn't get a chance yet to watch the last episode, basically what we did was we took and did a database search for companies that had a rating of strong buy, and of course that were publicly traded, and we gleaned the biggest 15 or 20, I guess we did 21 total different stocks, and we bought options on all of them based on the analyst's rating of strong buy. And Hagemeyer here is the one that has all of those, and here they are. So this column is what we paid, and this is what it's currently worth. And as you can see, we are up quite a bit. Matter of fact, we can get a total on this screen. Total put options value, 392. Matter of fact, let's look at the tax basis. That'll show us the whole picture. So we're up basically $100 billion. We started buying these on January 1st. It's now March 31st, and we're already up $95 billion. On a $300 billion investment. So we've made 25% in 3 months. So if we can make, I guess it's more like 33% since we started with 300. But anyway, if we can make 300 million a year off of this strategy, the value of not only this company, Hagemeyer, will more than double in a year's time, but we have nested options with Hartmax and Itochu to where all three of those companies will double in value every year. And if we can keep that up, the sky's the limit, basically. So what we're looking at today is whether or not it is time to cover these options and buy a new set, or if we should hang on to them, or what. So in between this last episode and this one, I went ahead and ran the ticker out to August the 1st. That's when our first set of options expire, is actually on August 15th. We have two companies that we have optioned, and those options expire in mid-August. So I went ahead and ran the ticker to see what happens with the stock prices, because we're not sure exactly, this analyst rating. We don't know what time frame it's based on. We don't know if it's 1 month or 2 months or a quarter, or what it is. So what I did was I ran the ticker out to August the 1st, and I go and look at the options, and it's pretty dismal what happens. So out of the 21 stocks that we bought options on, come August the 1st, there's only 5 that are still showing any kind of profit. All right, so Qualcomm is still up, although he's barely up. Japan Tobacco is up. Reuters is up. Bertelsmann is up. And SBC Communications is up about 10%, and then Lenovo Computers is up by double. Okay, so basically what we're looking at this point is trying to determine when is the best time to sell these, and it looks like 2 months out. Basically, we bought them in January, we want to sell them by April. And it would appear that the strong buy, or any kind of analyst rating for that matter, is adjusted up or down on a monthly basis. And so it's not really going to hold over more than 2 to 3 months. So, and it looks like basically when there's a strong buy recommendation, the stock has a temporary spike and then kind of settles back to a more normal trading level. So I think what we want to do with this strategy is one of two things. The first thing that we can do is we can basically on the first of every month, we can look up what companies are rated as strong buy and buy options on the top 5 or the most valuable 5, the ones that have the 5 largest companies, and just do that every month. And then it's a question of how far out do we make those options. So if we make them for 2 months out, they'll automatically be settled on the 15th, 2 months later. If we want to make them further out, we can actually help the counterparties. Because even though in the first 3 months they're losing money, come August 1st, they're making all kinds of money because they sold the option, they sold call options. And those sold call options or shorted call options are profitable at the 6-month point, okay, with only 5 exceptions. So if we institute the policy of buying these options and making them due or expire in 2 months' time, as we do that over the course of a year, the number of counterparties that we'll have in the game that still have cash enough to invest in options will steadily decline. But if we make them for 7 to 8 months out, and they have enough money to hold out until that 7 or 8 months pass, those counterparties will make a profit overall. All right, might not be, they might not get rich, but they'll make a profit. So I think what we're going to do is we're going to go ahead and do this every month. So on the first of every month, we're going to buy options on the top 5 companies rated for strong buy, and we're going to make those options expire 2 months later. And if we start to have a problem getting counterparties, then every once in a while we'll make them for 7 or 8 or even 9 months out, so that eventually our counterparties will be have enough money to continue the strategy. I don't want to do 9 months every time, because having too much money in the market will create problems for us from a industrial standpoint. These companies will all try to expand, and we will have no control over them because they'll be spending cash and they won't have to borrow. So freezing their loan will do no good. So I don't want to bloat the market with a bunch of cash, but at the same time, I don't want to run out of counterparties. So we have to find that balance. And if we get to the point where we're not finding counterparties, then we'll start setting our options out further. Okay, so what we're going to do today to start out with is we're going to go ahead and buy back all these ones that have got a 30% profit or more. And on the ones that are losing money or breaking even, we're going to look at them on a case-by-case basis and decide if we want to buy them back now or if we want to hang on to them. So basically, if they're still rated for strong buy, we'll hang on to them for a little bit longer and see if the value improves. And if they're rated to hold or worse, then we'll go ahead and cover it now and get our money back before we lose any more. All right, so starting with Deutsche Telekom here, we're going to buy this back. And I'm just going to go ahead and buy all the ones, sell. We're going to sell all the options we have that have a 30% profit or more. I'll fast forward while I do that, and I'll be right back. So we got all the really profitable ones sold off. Now let's start looking at these one by one, starting with Imperial Petroleum. His earnings are up. They're sliding back, but they're still up, and he's still rated for strong buy. Industry is deteriorating. He's very capable. He doesn't have a debt problem. He's more or less breaking even. Well, he sold oil short, but it's on the way down, so he should be making money there. And he has options that he's losing money on. That's the real problem. But his income is supposed to go up. So we'll check him again on April the 1st, just to make sure this still says strong buy. And if it does, we'll hang on to him. And if not, we'll sell it on the 1st. All right, so next up to look at is Kawasaki Steel. His earnings are up and still up. They're supposed to still be up. He's very capable. He does not have a debt problem. He's got options that he's losing money on to the tune of $2 billion, which is a big percentage of his net worth. But no, he's got them on Lenovo. Lenovo stays up, at least in the last, in my double check of the simulation. So maybe we need to cover him. He's another one we're going to look at. Let's see, when does he declare? April 23rd. We'll look at him on the 1st, and if it still says strong buy, we'll hold on to him till the 23rd to see if this projection holds true. And if his next projection is not at this level or above, then we'll go ahead and sell it. All right, so next up, Morgan Stanley. His income is up, supposed to still be up. He's reasonably competent. He's showing a profit on index futures. And the index is kind of holding steady at the 15,000 mark. He's got a bunch of options. And looks like he's breaking even. Well, no. He's losing a little bit. Not a lot. A little bit. Let's see. Let's look at the tax cost basis, see what it says. Or I guess the portfolio. No? I guess you have to have at least one stock so you can get that summary with the totals for the options. So he's losing 2 billion, losing 900, losing 500, 600, so that's 2,500 down, 2,300 down, 1,800 down, 1,400 down. So he's down 1.4 billion on the options. But he's making that up with the commodities, with the futures. And he doesn't have a debt problem, so I think we'll hold off. We'll look at this one just like we do Kawasaki. We'll check it. See, he declares on May 26th. I don't want to wait till then, though. We'll just decide. We'll decide in April. Okay, Aventus. Income is way up, supposed to still be up. He's very capable. He doesn't have a debt problem. Making money on futures. He's making money on options. And he's rated strong buy, so we're going to hang on to him for now. Let's see, where did his stock top out at? 68, so it's probably going to go up. When does he declare to? May 3rd? We may wait till then. All right, next up, Universal. Income is up, but supposed to go down. He's very capable. Industry is deteriorating. He kind of has a debt problem, and he's losing a lot of money on options. So this is one we're going to sell. So let's sell these options. Okay, Union Carbide. Earnings are up, supposed to still be up. It's expanding at a huge rate. It's very capable. Does not have a debt problem. It's making money on the index. And he's making money on the options. So he topped out at 44 and he's at 40 now, and his income is going nowhere but up. So we'll hang on to him. And he declares May 2nd. So we'll look at him again at the middle of April. All right, Hitachi. His income is up, but it's backsliding. And is reasonably competent. Doesn't have a debt problem. But he's losing money on options. Not a lot of money. 1 billion there, 1 billion here. But his income is supposed to be going down. He doesn't declare again till June. Let's see, what was his last earnings report? He made $6 billion, none of which was from extraordinary income. So, and we're losing 10 billion on him, and it's still going down. That was 21 billion a minute ago. Let's cover those. Let's sell those off. I don't want to lose any more money on that one. Caterpillar is up next, and we're breaking even on him. His stock price is up from when we bought the options, but our option value is flat. So I'm not sure why that is. It should be up, but it isn't. Income is up. It's still up, but going down. He's making money on futures. And he's got options. He's losing, making money, losing money. He's losing 3 billion. 2.5 billion anyway. Making it up with this. Doesn't have a debt problem. Let's look at the industry. Heavy machinery. Returns are kind of low, and with all the expansion, the earnings are going to keep going down. That's why his earnings are going down. It's because of all the expansion. So let's cover those two. We won't make any money, but we won't really lose any either. We lost 642 million on that. All right, so next up is Qualcomm, I guess. I don't know if we looked at Union Carbide, did we? I don't remember. Okay, yeah, we looked at him. Okay, so Qualcomm is next. Earnings were up, and oh no, they're down. Earnings are down. And they're still down. Projected to still be down. Doesn't have a debt problem. Making money off the index. That's flat. Losing a little bit, but he's making it back here. So these are basically even. Let's take a look at the industry. This is network and telecom. We've got Nortel in there. Oh, look at these returns. That's why. This Huawei Networks is killing it. He's killing the whole industry. And he's got a AAA rating, so he's going to keep doing it too. So basically is turning into a industry of the haves and the have-nots. Everybody's negative except for these three guys. Yeah, let's just that return. I mean, he's got the best return in the industry, but with all this expansion, it doesn't bode well. So let's go ahead and cover those two, or sell those off, I mean. We had a gain, just not as big as we would like. All right, Donaldson's next, and basically we're even on him too. His earnings are flat. Went up a little bit, but not enough to be excited. He's got options, but no futures. He is losing money on this one, making a little bit of money on that one. So he's losing about 800 million overall on the options. His debt's fine. And he's only rated to buy, not strong buy at this point. Expanding at 15%. So this industry is all over expanding. Let's see. Okay, I was going to look at something. 35% still a decent return, but I don't think it's going to get better. I mean, I was going to look and see what he topped out at. He's at his peak right now. He's at his peak right now. Ooh. All right, he's at his peak. Let's go ahead and sell that off. Gain of 418. All right, American Electric and Power. Basically, we're losing 100 million on that one. Stock price is down 1.5 points since we bought it. Debt's fine. He's basically breaking even on his options right now. AEP is here. He's got a 32% return. Lots of overexpansion going on here. Earnings are up and still up, but backsliding. Topped out. He's at his peak. Again, he's at his peak. Another one that's at the peak. I just don't know that it's going to go any higher. Still rated strong buy. He is. What do they say? 60. He's at 48 right now. All right, we'll wait. We'll wait till April. We'll evaluate it again in April. When does he declare? Usually, okay. Not till June. All right, New England Gas and Electric's last one. Income was way up and now it's sliding back. Reasonably competent. Spending a ton on R&D. Topped out at 54 and he's down to 50. So let's cover him. Or sell him, I mean. Sell those options. Had a loss of 800 million. That just leaves us with these, and we're up on look at that. We've already made 2 billion on him almost. Up $1.5 billion here, 3 billion there, 300 million, and breaking even. So basically on April the 1st, we'll double check all of these guys and make sure they're still rated for strong buy. If they're not, then we'll look at whether or not we want to sell them. We told you, we bought him for the long term, and I didn't show you what we have made or lost at Hartmax and Itochu, so let me show you that. The options on Hagemeyer have gone way up in value, which is apt to happen when you earn 70 billion in 3 months' time. And hopefully this will carry over into Hartmax's options, but so far they have not. So Itochu's options on Hartmax are actually losing money, at least right now. Now when Hagemeyer declares his earnings in June, this should turn around. Okay, but until then, it's probably going to lag and just be, basically break even plus or minus 10%. And then, let's see, gotta go to Hagemeyer. Hagemeyer, his options on Itochu are even worse off. Okay, but again, once Hagemeyer declares, Hartmax's value should go up, which should make Itochu's stock options show a profit. Okay, so in the time that it took us to do all of that, hasn't even been a day yet, and yet our index has jumped 1,000 points. Crude is down 20 points. Gold is sliding down, but silver's on the way up. So I think what we want to do is we want to sell short some gold, and probably want to sell short some oil too. It's too bad we didn't have time to do that first. And we have a scenario going on right now that is boosting our GDP growth. Right now it's at 0.9. It was at 0.8 in the last episode. As I ran my tests through to August, the trend was for the GDP growth to keep climbing. I think it got up to 1.3 or 1.4, and the prime rate actually kept going up. It went all the way up to 12% as I approached August the 1st. So that's bad in terms of trying to buy stock index futures right now, because high interest rates tend to depress stock prices on everyone except insurance companies. It's especially harmful to banks who make less and less of a profit margin on their loans. And we have trillions and trillions of dollars invested in prime and subprime mortgages. So to keep the bank from losing money, we're going to be doing some investing at the insurance companies and more subprime mortgages. When the prime rate gets to 12%, we're going to be buying some more bonds. And right now, the only insurance company we have that doesn't have enough money invested in bonds is Progressive, but he doesn't have any cash really to invest in bonds right now. So we're going to have RakeM Insurance donate some bonds to him and then buy some new bonds. All right, so let's start with RakeM Insurance and have him put some more money in mortgages. He's got $2 trillion in cash. Just going to buy another $1 trillion in subprime. Okay, and let's go to Mitsui. Let's put half of this, so 650 billion. Tokyo, we'll put 750 billion. Now we'll go to the bank and he's going to have to sell off some of his prime mortgages. Oh no, he's still got enough. Never mind, I thought he was going to be out of money. But what we've just done is we've reduced his CDs by $2 trillion. Or 2.5 trillion, and so that's less interest that he'll have to pay out to our insurance companies. And I'd like to do something with my money as well, just so he doesn't have to pay me interest, because it's costing him. Let me go to me and I'll show you what my income is on that. So here's the income projection. Interest on cash balance is $633 billion a year. That's what it's costing him. So in other words, $150 billion a quarter he's having to pay me in interest. And right now his net worth is only at like 1.8 trillion, I think. Yeah, 1.9. And we need to make sure that we invest every dollar that the bank has into something that earns interest. Otherwise he will lose money. He made a little bit in the last quarter, but all last year we weren't really paying attention, and we ended up losing 50 cents a quarter per share. And that doesn't help RakeM Insurance or the bank. So we need to keep a better eye on that. All right. So anyway, let us see if we can sell short some gold here. Let's see, who do we want to do it? That's the question. Hagemeyer, well, we don't want to use up his cash. He's going to be buying options. So PBR could do it. He's got plenty of money. He doesn't have any futures, just physical. So let's sell short gold. And maybe oil. We'll do the gold first and see what happens with the price. If it jumps back up above 100, we'll short it. So I'm going to sell short some gold, and I'll be right back. We sold short 4,400 contracts of gold. It's down 100 points now, but oil is up. So we're going to sell ourselves short some oil. And I don't know if 102 is considered an extreme price or not, so we'll see. And it doesn't look like it. So we'll do the full 100,000 contracts if we can afford it. Can. That was only 6 billion. Let's do the full amount. And let's hope that price goes back down because it's at 105 now. Looks to me like our stock price on RakeM Insurance is going up. It's rated a strong buy. His earnings are down, but they're going up. It's rated a strong buy to 42. I think before April gets here, let's have Hagemeyer buy options on RakeM if you can find a counterparty. RakeM Insurance is worth so much money, we may not be able to do this, but if we can, that would be a ton of money. I mean, even 1% would be a ton of money. Let's make it for $34.50 to reduce the amount of the cost of the option. So if we do 1%. For May, it's going to cost $33.5 billion. I don't know if we can get one for that much. Goldcorp probably could afford it, but I'm not sure. 3% is public. Let's try 2% and see if we can get away with it. No. All right, let's try again. For $34.50 and just try 1%. All right. Doesn't tell me who it was. Might be here though. Nope, doesn't say in there either. Let's go and see who bought it. It's probably going to be Gold Corp. Go down to Gold Corp and see if he has it. Yep, right there. Alright, so Hagemeyer option RakeM Insurance, and it's worth a whole lot less than we spent on it. So let's hope that price goes up. That'd be bad news if it didn't. Lose $33 billion. That's half our profit from the other stuff. Okay, so one of the problems that we've got in looking at everything else is that Hagemeyer and Itochu and HeartMax are all in these really small industries and have almost no money invested in assets. And there's several industries that we aren't a part of yet that have significant amounts of money, but not as much as we would ideally like. Those industries don't have as much money as we would like for these companies to invest. I would like to be able to have about 100 billion in business assets at each of these companies. Obviously, we don't want to just buy all 100 billion off the shelf. We want to take our profits from the options that we're buying and selling and put that into business assets. And when we reach a market share to where we don't want to expand anymore, we'll find other places to put it. But for now, I want to get Hagemeyer out of bookstores and get him into a bigger industry. And the industry that I want to put him in is one of these top 3 or 4 industries. And the one that's most attractive to me is going to be this integrated internet service, because we've only got a small market share there now, and yet LinkedIn has almost 80 billion in assets. And he's only got a market share of 16%, so we can double our investment there. And it will impact the returns, but the growth rate in internet service is pretty good. It's like 12% or something. So what I want to do is I want to buy some assets in this industry. All of these companies are too big to buy off the market. So we're just going to sell off the assets that we have in bookstores. To begin with, we're going to sell Hagemeyer's assets to Itochu, and then we'll have Hagemeyer buy new assets in the internet service industry. So now Hagemeyer has no assets. The only problem with doing this is that we're going to lose the tax loss carryovers, but we have to get into an industry that has more money in it. So we're going to buy corporate assets. Yes, we're going to lose these tax loss carryovers. Yes, to buy new assets. Internet service. And we're going to start with 30 billion. Okay, so there we are. We're going to grow at 9%. We're going to give them a 25% R&D, which means we're going to be negative here, but that's fine. We're going to leave the dividend 0 for now. Okay. And hopefully by the end of the year, we'll have 100 billion in assets here. So for Itochu, I guess semiconductors is going to be the best bet. got 90 billion in assets and he only has a 21% share. So we can add another 90 billion to that and still not be a monopoly. So Itochu would need to sell his assets and then buy assets in the semiconductor industry. Let's go take a look at the semiconductor industry. He's still growing at a tremendous pace here. And yet the industry growth rate's kind of blah. But there's a lot of companies we could just buy. Let's add this up. So, oops. So that's, where is it? 4.1%, 6.5, 9.5, 10.9. Can't get that one. Can't get that one either. So it's going to be 8.1, 8.2. 8.2%. That is roughly 30 billion, which is where we want to start. Alpha Industries here has a AAA credit rating. Yet he owes money, so how can he have a AAA credit rating? A AAA was if you had no debt whatsoever. He's only got what? Around 10% debt. So we need to kill his growth rate, really. What is his target price? 83.68. He's almost there. Got a little bit to go. Let's reduce this growth rate to 8%. We don't want him going into more debt, and we don't want the returns in this industry to deteriorate any further, especially if we're going to put another company in here and buy assets. We're going to hold off on doing anything with Itochu until next quarter, probably. Because Itochu only has about 25 billion to invest. Oh, he's got more like 40. Okay, so basically we have to wait. We have to wait until some more money comes in. Max doesn't have a dividend. Neither does Hagemeyer. Once he starts generating some income, matter of fact, he's already generating. Let's give him a dividend. Let's give him a dividend of $1.30. And we'll do the same thing for HeartMax. We'll give him a 2% dividend to 82 cents. Okay, so we've made it to April. So let's go to our general database search and confirm that the companies that we still have options on are still rated for strong buy. I guess I should have updated this. Let's just go to Hagemeyer and look them up one by one. So Imperial Petroleum is a strong sell now. He's a strong sell. So let's cover him. Proceeds will be 4.3 billion. We lost 141 million. All right, Kawasaki Steel. is a hold. He's at 76, which is down from his peak. So we can make a little money by covering or selling those off, so we will do that. All right, next up is Morgan Stanley. Is a strong sell. So let's cover those two, or sell those two. All right, Aventis, we made some money by holding on to him. It's still rated as a buy. Doesn't declare until May. He hit 68 and he's down to 66. But it looks like he's headed back up. He hit that peak last month. So we'll hang on to him a little bit longer. Union Carbide is a hold. Expanding so fast. Of course, he doesn't have that big a market share either. He peaked at 44 and he's now at 43. Looks like he's going up, so we'll hang on to him. American Electric and Power, rated a hold. His income's going down. He was all the way up to 53. He's backsliding now. He hit that last month. Looks like he's going up, but his income is going down, so I don't really trust it. We can make a profit now, so let's just sell those off. Carbide, we've made not quite double our money on that. All right, so that's it, just those two. We'll need to look at those again in a couple of weeks. So now let's look at the ones that are rated to for strong buy, and what we want to do is we want to change this to the max. We want to increase this number until we get down to about 10 over here. There we go. So 50 billion. All right, so Baidu, Colgate Palmolive, Dr. Pepper, Huawei Networks. This one I think we just had and we sold it. Next Semiconductors, Pioneer, somebody already owns. SBC we just sold. Okay, so let's take a picture of this. That gives us, 7 stocks? Let me grab a paintbrush. Okay, so starting with Baidu. He's a strong buy. Income is up but going down. We just entered that industry and added a bunch of assets there. He's reasonably competent. Has virtually no debt. He's at 31 now and his max was 33. He just had a spike. Looks like he's headed down. Based on the fact that we just bought assets there and the returns will be lower as a result, I think we'll skip that one. Alright, so Colgate Palmolive is next. Household and personal products. We don't have anything there of our own. He's at 280 and he's growing like crazy. Lots of overexpansion, but the returns are pretty good. Income is way up and going further up. A ton of money. All right, let's buy options on him. so we've got options on 100% now, and I changed the strike price as I was buying them. It went up almost immediately. Jumped from 124 and change all the way up to 141 now. So I made these all except for this one. I misclicked and got this one for June, but most of them, the rest are all for May. So on May 15th, just over a month away, and before he declares again, they'll all be settled. I don't have to actually go sell those unless for some reason we want to sell them before May 15th. All right, so let's go look at Dr. Pepper. So his income is up, and it's going up even further. He hit 90.41, but he's currently at 88.50. His debt's in a good situation, plus he's got cash on hand. Looks like he's making money on the index, and he's making money on the options, and these will continue to go down, except for Itochu. Itochu hopefully will go up, but it probably won't go up between now and June. So let's buy options on Dr. Pepper. I will do that, and I will be right back. So it went from 88 and change all the way up to 102.5, and we have nearly tripled our money already. So if this is the kind of stuff we can expect, we're going to do very well. All right, so Hallway Networks is next, and he doesn't really have that dramatic an uptick in his earnings, but he's making money on stock index futures. Again, he's got virtually no debt. And he's growing like crazy, which is going to drive up his stock price. He's at 31.78. He's pretty much at his peak right now, but he's got room to go up. So we're going to buy options on him, also to expire in May. Actually, he doesn't declare till June. Let's make it June 15th, right before he declares again. All right, so I'm going to buy options on Hallway Networks, and I'll be right back. The good news is that in 4 days, well, I guess 9 days, we're up another 81 billion on our options. The bad news is that both gold and oil are on the rise, and we've shorted them both. The Hagermeyer is doing great, and PBR is losing all of his cash. But they really haven't moved enough to get worried just yet, so we'll ride it out for now. All right, so next up is JP Morgan and Company. Still rated strong buy. His earnings are up, but slowing down. It's got a capital shortage. Probably because we have him frozen. So we'll have to look at unfreezing him. So he's breaking even on the stock index. He's losing money on his options, so we're not going to mess with him. Alright, so next semiconductor is next. His earnings are up and staying up. He's growing at 47%. Got no debt. Making money on the index. Losing a ton of money on his options. That won't affect him until he covers them. So I think we can safely do a 2-month option on him because none of his options expire between now and then. So we will buy calls on him. I will fast forward while I do that. All right, next on the list is Pioneer. And Mitsubishi Electric already has options on 100% of him. SBC we just sold. Let's go take a look at him. His earnings are up and going up even more. Got virtually no debt. He's making money on the stock index. Of course, the index has been going up, so that income's going down, or that profit is going down. And he's losing money on the options, so we will not mess with him anymore. Shanghai Automotive. Let's look at him. He's in, what industry is he in? Auto Asia, which we have Toyota there. He's a small factor. He's worth a lot of money though. He's trading at a high premium. He's had his peak right now. I'm not sure I want to mess with this one. He looks like he's already topped out. Expanding at 35%, very capable. The earnings are going up. His debt's fine. He's got options and he's breaking even on them. But Itochu is up. So he's probably gonna lose money. But it's not that much money. Bringing in over $1 billion a quarter. 1967. I don't know, that's pretty high. Let's take a look at Toyota America. You on our list? No. All right, Toyota America trading at double his value. He's got a loan, but he's got more cash. He got enough cash to pay it off. Earnings are up but going down. Oh, no, that's 2 quarters. Okay, so they're up and they're staying up. So they're not up a whole lot. Industry is deteriorating. He's very capable. He's growing at 16%. He'll probably go up a little bit over the next quarter or two. Let's buy options on him. All right, so I'm going to buy options on Toyota America. And we'll make it for May because he declares the first week of June. All right, so I will buy all of these and I'll be right back. Okay, we've been interrupted by a cheat scenario. Washington political liaison, destroy after reading, creation of temporary meadows on federal land. As almost everyone now knows, the company has logging rights on certain national forest land in Idaho, but we are now severely limited in our cutting rights, and clear cutting, which would be extremely profitable, is not permitted. But after lengthy private negotiations with key members of the administration and Congress, we've worked out a bargain that should greatly benefit Republic Gypsum. The current powers that be have assured us they will look the other way if we go in and do a quick and dirty clear cut of the forests in question, which includes large stands of prime old growth trees, provided that we make substantial contributions to certain of their packs out of our political slush fund. About $2 million is all they want. We can be in, cut the trees, and be out before the public even knows what happened, if we don't bother with stream protection and other Forest Service guidelines. There's about $50 million of standing timber there for the taking. Do we take it? Now, Republic Gypsum is a company that just went bankrupt, and $50 million, I'm not going to waste my karma on that. I'm just going to say no. And we are going to go back to buying options on Toyota America. All right, so let's take a look and see how we're doing. Aventus is way up. What's our date now? 14th. So let's go look. We need to look at these two. So Aventus, he's come down from strong buy to buy. He doesn't declare till May. And it's 67.45. Is not quite his peak, but it's awful close. I think we're going to go ahead and sell those off. Union Carbide, 44.30, which is his peak, and it's now rated to hold. So we'll sell those as well. All right, so we're up to 466 billion in value. We've increased our value by 166 billion in 4.5 months. No, 3.5 months. So let's go look at HeartMax, see what his options on Hagemeyer are worth now. More than double. And Itochu's index futures on, or excuse me, stock options on HeartMax do not reflect the increase as yet. So we need to get, in the next episode, we need to get HeartMax and Itochu invested in an industry that provides them with some income, some regular conventional income. All right, but we've been going for a long time today, and I think this is where we're going to end it. I think we have figured out what the most profitable strategy is for taking advantage of the analysts' ratings. You just look to set it for either 2 months or possibly 3 if you're at the very beginning of the month and the company that you're buying options on has just recently declared. But looks to be very profitable. I mean, 160 billion. We've increased the value of our company by 50% in just 3 months' time. And if we ever start showing a premium, I don't think that'll happen until we have at least 20% of our assets invested in business assets and equipment, just to get out of the being categorized as a holding company. The holding company is defined as a company that has less than 20% of its net worth invested in business assets. And until you get out of that category, your stock price will never really reach a premium. You'll always be lagging behind your net worth. So we've got to get at least $100 billion invested in business assets And I think at that point we'll start seeing a premium, and then this round robin set of options that we've got, we'll see a huge improvement. All right, but that's it for today. Thanks for joining me. I hope you enjoyed it. If you did, please like and share. And until next time, this is RakeM saying, have a good one.